Most people don't lose money in crypto because they pick the wrong coin. They lose money because they approach cryptocurrency with the wrong mindset. They chase hype instead of understanding crypto psychology. They panic sell instead of thinking long-term. And they treat one of the most powerful financial technologies ever created like a casino. This video isn't about charts, predictions, or moonshots. It's about the cryptocurrency mindset that quietly drains accounts, and why emotional investing, fear, and short-term thinking cause people to lose money over and over again in crypto. Before we go any further, if you care about building real wealth, understanding money, and approaching crypto the smart way, hit the subscribe button. This channel is about thinking clearly, not reacting emotionally, especially when it comes to investing and digital assets. By the end of this video, you'll understand why most people misunderstand crypto, the biggest mindset mistakes that cause panic selling and bad decisions, and how long-term crypto investors think completely differently from everyone else. Once you see this, you'll never look at crypto the same way again. The real reason people fail in crypto. Here's something most people don't want to hear. Crypto itself isn't the problem. Volatility isn't the problem. Even bad timing isn't the real problem. The real problem is how people think about crypto. Most people approach cryptocurrency with a short-term, emotional, get-rich-quick mindset. They're reacting to price instead of understanding value. They're chasing pumps instead of building conviction. And they confuse speculating with investing. That mindset almost guarantees one outcome: losing money. What makes this worse is that crypto magnifies whatever mindset you bring into it. If you're patient, crypto rewards patience. If you're impulsive, crypto punishes impulse. Crypto doesn't create bad habits, it exposes them. Crypto isn't a slot machine, but people treat it like one. Think about how most people enter crypto. They don't start by understanding blockchain technology or the crypto adoption cycle. They don't study how digital assets actually work. They don't think about use cases, incentives, or long-term adoption. Instead, they start because a coin is trending. A friend made money. A headline says, Bitcoin is exploding. Or social media says, this is the next big thing. That's not investing. That's reacting. This is where crypto FOMO takes over. People buy crypto at the top because they're afraid of missing out. Then when prices drop, which they always do, fear replaces excitement. Panic selling begins. Losses get locked in. And suddenly crypto feels rigged, but nothing broke. The technology didn't fail. The market didn't cheat. Their mindset was broken from the start. Emotional investing is the silent killer. Let's talk about emotional investing, because this is where most crypto portfolios quietly die. Crypto is volatile by nature. Price swings are not bugs, they're features of an emerging asset class. Volatility is the price you pay for upside. But when someone doesn't expect volatility, every dip feels like danger. Every pullback feels personal. Every red day feels like a mistake. That's when you see panic selling crypto during normal market corrections. Overtrading crypto to fix losses. Chasing crypto pumps after the move already happened. Constantly reacting to crypto price instead of fundamentals or long-term value. This behavior has nothing to do with intelligence. Smart people lose money in crypto every day. It has everything to do with psychology. Without the right volatility mindset, even strong projects turn into painful emotional experiences. And once emotion takes over, logic disappears. Investing versus speculating. This changes everything. Here's a simple line that separates winners from losers in crypto. Investors think in years. Speculators think in days. Most people say they're investing in cryptocurrency, but their behavior tells a completely different story. If you're checking prices constantly, if every red candle stresses you out, if you don't clearly understand why you own what you own, if your plan changes based on headlines, you're not investing. You're speculating emotionally. Long-term crypto investing requires conviction investing, risk management in crypto, thoughtful portfolio allocation, and patience through volatility. It also requires accepting uncertainty without panicking. Without those things, crypto becomes exhausting instead of empowering. It becomes something you survive instead of something you understand. Why long-term thinkers win in crypto? Every major wealth-building asset in history punished short-term thinkers. Stocks did it. Real estate did it. Private businesses did it. And now cryptocurrency is doing it. The people who win aren't the ones who perfectly time tops and bottoms. They're the ones who understand the long-term thesis and stick to it through noise. They see crypto as a long-term investment, not a get-rich-quick scheme. They understand digital assets as a shift in how value moves globally. They believe in the Bitcoin long-term thesis, not daily price noise. When your time horizon changes, your stress disappears. When you zoom out, volatility shrinks. If this kind of calm, real-world perspective on money, investing, and crypto helps you think more clearly, make sure you're subscribed. These videos are designed to help you build confidence, not anxiety, around your financial decisions. No hype. No panic. Just clarity. The biggest crypto mindset mistakes that cost people money. Let's break down the most common mindset errors that quietly destroy portfolios. Get rich quick thinking. Crypto rewards patience, not urgency. The faster someone wants results, the worse their decisions become. Ignoring risk management. No position sizing. No diversification. No plan for volatility. Just hope. Chasing hype cycles instead of understanding fundamentals. Buying what's popular instead of what's durable. Confusing volatility with failure. Price movement does not equal project failure, but many people treat it that way. Lack of financial literacy in crypto. People invest in things they don't fully understand, then blame the market when emotions take over. Every one of these mistakes is mental, not technical. The mindset shift that changes everything. Here's the mindset that actually works. Crypto is not about being right fast. It's about being right long enough. When you approach cryptocurrency with a long-term perspective, clear risk management, realistic expectations, and emotional discipline, crypto stops feeling chaotic. It starts feeling boring. You stop obsessing over every price move. You stop reacting to every headline. You stop needing constant confirmation. And boring is exactly where wealth is built. Why most people never fix this? Most people don't want to fix their mindset, they want certainty. They want guarantees. They want someone to tell them exactly what will happen next. They want safety without discomfort. But markets don't reward certainty seekers. They reward clear thinkers who can sit with uncertainty without panicking. Crypto exposes emotional weaknesses faster than almost any other asset. That's why it feels so brutal, and why it's so powerful. It forces you to confront impatience, fear, and impulse head-on. The truth about losing money in crypto doesn't make people lose money. The wrong cryptocurrency mindset does. If you treat crypto like a casino, it will punish you. If you treat it like a long-term investment, it will teach you patience, discipline, and perspective. And those skills matter far beyond crypto. They spill into every area of money and life. If this video helped you see crypto differently, hit subscribe. This channel is about understanding money, investing with clarity, and building wealth without stress or hype. Thanks for watching, and I'll see you in the next one.